One day you told finance is the safest career. The next day you hear about layoffs, automation, and shrinking bonuses. So, what's the truth? Which finance career actually pays you the most in 2026? And most importantly, how many people really reach that level? Let's break it down with real data and the uncomfortable reality most people don't talk about. The big truth: the highest paying finance careers are still concentrated into the top three areas. The first one, investment banking; second, private equity; and third is hedge fund. But why? Because these roles sit closest to the money. They directly control large amount of capital flow, manage investment, and drive high-stake financial decision. More capital, more risk, more reward. That's the equation where the real money actually is. Here's the global reality. At the very top, you will find private equity partners who earn more than $10 million a year, many driven by carry and fund performance. Hedge fund portfolios managers can make anywhere between 1 million to 10 million plus depending upon what is the performance. Investment banking managing directors typically earn between $1 to $3 million per year. At an entry and mid level, the numbers are still strong, but it is not life changing. Private equity associate in top firms earn around $300 to $500,000. The investment banking analysts usually start with $150,000 to $2 lakh per year. But here's the actual catch: the real money is not at the bottom; it is concentrated at the very top of the pyramid. In India, when you do the reality check, what is happening? The numbers look very different. Investment banking mid-level roles pay around 20 to 40 lakhs per annum, while the senior level role obviously crosses above 1 crore. Private equity professionals at the mid-level earn between 25 to 60 lakhs. In hedge funds, these same professionals earn between 50 lakhs to even crores depending upon their performance. The base salary may be lower compared to a global market, but bonuses and international exposure can push compensation even higher. The upside exists, but the competition is very, very brutal. What's changing in 2026? Here are the top major three career shifting points that you need to know. First, hedge funds are back in big way. After a long period of a very, very average performance, many funds have started delivering a strong result in this year. Capital is flowing back and hiring is accelerating. Second, quant and AI roles are exploding. Algorithm trading, quantitative strategy, and data-driven decisions are making a dominant in the performance chart. In simple terms, finance plus coding equals a slightly future higher pay. Third, finance is becoming more tech-driven and also deeply integrated with the tech. AI, cloud computing, data analytics are becoming more and more essential skill. Traditional finance skills alone are no longer enough. And one more important reality: if you're getting into high-paying finance role, salary is only a part of the income because bonus makes a huge portion of the total earning, especially if you're in investment banking, private equity, and hedge fund. So your performance directly decides your pay. What people on the ground are saying on finance communities and discussion forums, a pattern is continuously getting showed up again and again. Everybody wants private equity, but very few make it. Investment banking is seen as a gateway, but not the final destination. Work-life balance is becoming extremely difficult in a high-paying role, and quant roles are considered as one of the smartest way to make money today. One common sentiment which we have seen is that if you survive investment banking, you can almost unlock everything else. But there is also a hard truth. High pay comes with long hours, constant pressure, and even intense competition. Top roles are highly filtered, often favoring candidates from the elite institutes or with strong network and some level of global exposure. And most people in finance will never reach that top 1% salary bracket. That's not pessimism, that's actually the reality. So the real question that any student should ask is not whether finance pays well. It definitely does. The real question is like this: are you willing to pay the price in terms of the time, in terms of pressure, and relentless competition to reach that top? Because in 2026 and beyond, finance will continue to reward the best, not the average. And the gap between the average and the top will only get wider. The choice is yours. If you like this, subscribe for more real finance content. See you in the next video.